Thanks for listening to the Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
What's going on, y'all? Welcome back to the Bitcoin Mining Stock Show. I am your host, Colin Harper, editor-in-chief of Blockspace Media. Today, we've got an awesome show lined up for y'all with Jeff LaBerge, head of capital markets at Bitdeer Group. Jeff's going to be talking with us about Bitdeer's AI and HPC strategy, going to be talking about some of the advancements that they've been making in the ASIC chip manufacturing business and their upcoming SEALMINER A2 and A3. And we're going to get into a little, talk about their pure play mining business as well. But we really want to be focusing on the ASIC manufacturing business, which is probably the most interesting thing that any public miner, I think, is doing currently, as well as their HPC and AI strategy. So without further ado, we're going to add Jeff to the stage and get this ball rolling. Jeff, how you doing, man? Welcome to the Bitcoin Stock Show.
Thanks for having me.
Yeah, absolutely. Doing great. Calling in from sunny San Diego. Hopefully, weather's cooling down a little bit going into fall, and we're easing into cozy season. Which
we are, aren't we? Right? It's getting nice and chilly in the morning, so can't complain about that, right?
Yeah, exactly. So, just a quick intro from your side for our listeners. Bitdeer, I think, is one of those companies that really, I think, hasn't interacted as much with Western audiences. Obviously, a much newer public company within the sphere of public miners really bursted onto the scene last year and quickly kind of became one of the companies to follow, both from an operational standpoint and from what we expect in the future with all of these different business lines. So if you could just give us a quick intro on yourself and maybe a little bit about Bitdeer, that would be great.
Yeah, so I'm Jeff LaBerge. I'm the head of capital markets and strategic initiatives at Bitdeer. I've been here just over a year, so I came in just a few months after the IPO, as you mentioned. So we did go public back in April of 2023. And we're fairly new to the public markets, as you said, and fairly new, especially to the investor market, capital markets. So I've taken that role over since I arrived, and we've grown a lot, and we've gotten the name and the word out there a lot more, but still a lot more to do. Because, as you said, I think we are still a bit under the radar and a bit overlooked at times, and but I think that's changing a lot. So I think we've made a lot of progress over the last few months, especially, and starting to get the eye of a lot more institutional investors, looking at the ASIC play, really looking at the HPC play. So I think people are realizing there's a lot of ways for us to win here, and a lot of optionality in the business model, and a lot of that might not be value factored into the current enterprise value.
Yeah, we had an op-ed written by Brandon Bailey of Second Gate Advisory a while back. I'm sure you've seen it. Quick caveat, I'm going to try to remain as objective as possible. This is not financial advice. I'm not endorsing Bitdeer, but Bitcoin BZ, Brandon Bailey, in that op-ed made a very strong argument for the fact that Bitdeer, even when you value its current hash rate under management and megawatt capacity, is undervalued compared to what we would maybe call some of the blue chip or big 4 or 5 miners, right? The ones that come to mind, I think, where most people are like Riot, CleanSpark, Corsair, Marathon. And he was also making the argument, and I want to get into this for the first half of our show, that notwithstanding all of the just pure play mining stuff up until recently, most investors have looked at miners for, the AI strategies are becoming kind of more of a calculus when investors value these companies. But he also made a really strong argument for a Bitdeer's burgeoning ASIC manufacturing arm and how that could factor into its business down the road, especially as it relates to reducing the CapEx costs for new deployments. So to start, from your understanding and from Bitdeer's history, where did this ASIC manufacturing line come from? I mean, I know Jihan Wu, obviously very much a factor here, was formerly one of the founders at Bitmain, left to go start Matrix Group and then eventually Bitdeer. Was this kind of always in the cards for Bitdeer?
Yeah, so Bitdeer spun out of Bitmain. So the two companies split back in 2020. And so initially, Bitdeer was just a pure mining company. And, obviously, the technology component is really in our company's DNA, our management's DNA. It's Jihan's real passion, at the end of the day. So, it was kind of a inevitability, but we just launched really earlier this year. We've been in the R&D mode for several years, obviously, building the chip and the new chip design, the whole chip team, really. But again, I think we, at the end of it, we are a technology company more than just a Bitcoin mining company. And, that technology component, I think, is really what differentiates us and sets us apart from a lot of our peers. And it's not just Jihan. If you look at some of our other senior management, Matt Kong also has a deep software background. He was at Tencent for many years. And then Harris Bassett, our chief strategy officer. Harris actually put together a team back in 2014 that essentially helped create the existing architecture for Bitcoin mining rigs that are used today. So very deep semiconductor background, very experienced in this space, and right there, we think again that's our real competitive advantage.
So speaking of the competitive advantage, looking at, obviously there's a lot of experience here. I think that there have been obviously numerous attempts to break into the ASIC manufacturing market. Right now, we really have a duopoly with Bitmain and with MicroBT. There have been some attempts in the past, like from Intel, making their block scale ASIC chip. That didn't really work out. Blockstream purchased Spondoolies a few years ago. We haven't really heard much about that at all. Yeah. There are some promising entrants currently, or there are some promising new companies currently with the likes of Bitdeer and Auradine. I want to get into the kind of nitty gritty, because I think a lot of people don't understand how difficult it is to have a seat at the table with a ASIC chip manufacturer like TSMC to get the tape out and the allocation where you can even be viable at all. So how did Bitdeer go about building those relationships with TSMC? I guess some of them were already existed, but what did it take to get a seat at the table and say, we're worth being considered for some of your best chips?
Yeah. So I guess, back to your first point. Yeah. Designing ASICs is difficult. It's not an easy task. Again, I'm not a circuit design guy, but I do spend a lot of time with one. And, I've learned that it is not an easy thing to do. So, there's a couple things. So the first is just the chip design itself. It's a very unique, intricate, kind of niche chip, and it takes a very specialized skill set to do that. Second, you do need to have, part of it is the chip design. The other part is your foundry. And that you make a great point. That's often overlooked. I don't think people quite understand. TSMC is one of a few, but probably the best semiconductor foundry in the world. So to have an allocation with them, they're always on the cutting edge of efficiency and just overall chip design. So having a seat at the table with them and using them as our foundry is a big advantage. We will have access to the same type of technology as other miners do. Bitmain obviously uses TSMC as well. So as far as how you get a seat in there, look, a lot of it is your design work. Your company, they're working with Apple, NVIDIA, they're working with the big players in the world. So but it's all about relationships too. And I think they trust our management team. They know that we know what we're doing, and we're going to deliver good product to them, and we'll be a long-term customer.
And for some reference for our listeners, TSMC in Q2 2024 had captured like 61% of the foundry market. So it's like, this is the company to go for chips. There's some other good ones too, obviously. MicroBT uses Samsung, right, but I think that's a good example of how impressive it is, I think, in some ways, that Bitdeer has established these relationships with TSMC to get these tape outs for these next generation miners. So I want to go into the kind of production schedule. So correct me if I'm wrong, but actually I have the Bitdeer roadmap up here. Mm-hmm. So the Seal 1, the first chip for the SEALMINER A1, I believe was the model that it was called. That was released in Q1 2024, and those have been deployed at Bitdeer facilities currently. Is that correct?
Those are in production right now and being deployed. So we've deployed some as sort of a pilot test plant in our Norway and our Texas facility, and the rest are in production. So just to be clear, A1 was our first generation ASIC. It was a good, not a great machine. So we did, but it was our first crack at it, and we were pretty impressed with the results. We'll use that miner exclusively internally in our own data centers. So that's going to power the 3.4 exahash expansion plan that we announced earlier this year. That's in production right now, and that we'll start to roll out probably the later part of Q4. November, December. Could spill into Q1 a little bit, but we do expect to deploy that additional hash rate by, let's say, sometime in Q1. And that will be it for A1. We will not sell that commercially. A2 just came out, and we just got the specs back, and they were in line, if not better than modeled. So we were able to hit 13.5 joules per terahash in the power saving mode, which shows their ability to clock up, clock down, and we should be pretty right around that our roadmap for efficiency in normal mode. And that was on the 4 nanometer platform as well. So I think that's important to note that the latest and greatest process right now is 3 nanometer. Some folks are using that. We know the block guys, I believe, announced that they're on the 3 nanometer platform. We were able to achieve 15 and a half joules per terahash on the 4 nanometer platform. So again, our second full design that was taped out, we were pretty happy with the results. So that will go into production as early as November. We'll get our chips ordered, and those could be ready for deployment in Q1. So A2 will be our first commercial miner. We'll use this ASIC internally, and we're also going to start selling to third parties as well.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
What would be as much as you can tell me, what's the split there? Like, what allocation should go towards Bitdeer, and what allocation do you think will be shipped out commercially to other miners and things like that?
Yeah, so that's really the beauty of the business model here, because we are a miner ourselves, and have a significant pipeline of power capacity. We'll have a home for every ASIC that we ever produce. So the decision to sell versus use internally is going to be very much market driven. If there are times where we don't feel like ASIC pricing is supporting a third party sale, we'll likely deploy it internally. And again, if we see ASIC prices shoot up again, or even stay at current or near current levels, maybe more attractive to start selling them into the market. So it just creates more optionality for our business, and again, as you said, is going to significantly reduce our capex costs on what's the largest capital investment a Bitcoin miner makes. It's the ASIC. It's 75-80% of the cost of the total facility. So and we'll essentially control our entire supply chain. We'll have full visibility into our production, and we'll know when exactly when our rigs are going to be delivered.
Yeah, exactly. And I'd like that point about the optionality. I think can't be stressed enough. Mm-hmm. The idea that if ASIC prices rip, if Bitcoin and hash price go up, then Bitdeer has the ability to offload these onto the market. The margins are going to be fatter. It makes sense. And also at that point too, your current fleet, if you're, obviously you want to keep upgrading it, but if hash price is going up, then the margins on that current fleet, even if it's not totally up to date with these latest generation ASICs, you're going to still be making a decent margin. And that's one thing I think that this is maybe working against Bitdeer in some capital markets currently in terms of not capital markets, but in terms of some investor markets currently. If they look at Bitdeer's efficiency versus their peers, Bitdeer has one of the highest, and lower being better, higher being worse. Right. One of the highest efficiencies. It's like 31.4 joules per terahash right now, something around that. Right. But what people are missing with that is that the reason for that is because Bitdeer has known that it has this ASIC manufacturing business and these ASIC miners in the pipeline. So I would assume that y'all are waiting for these new machines to come in and looking at that optionality to deploy these. Obviously, if you are going to be the ones making the shovels, you don't want to go buy someone else's shovels, right?
Exactly right. So that you hit it on the head there. So we obviously did skip this last upgrade cycle for obvious reasons now. that we knew this was coming, and we would rather invest in our own R&D, continue to generate free cash flow with our existing fleet. We've got a pretty good cost structure, so we managed to keep reasonable cost structure there. But yeah, it needs to be upgraded, and now it will be again at a meaningful discount to what others in the industry will pay, because we can build them for ourselves at cost.
So before we put a bow on this, I want to return to the different models that you guys have currently. So you said that the SEALMINER A2, you expect to start receiving shipments or manufacturing it at the end of this year and then start deploying early next year. So where does that put the SEALMINER A3? Is the SEAL 303 chip currently being designed or taped out?
Yes.
And when can we expect that miner to hit the market?
Yeah. So SEAL A3 is underway. Development is underway right now. So think of it more as a shrink of A2. So we're going to take A2 and go down to the 3 nanometer platform. So that's where we anticipate getting in that 10 to 12 joule per terahash range by shrinking down to the thinner node, thinner wafer. And then so that will be, if all goes well, we'll tape that out early Q1 probably. And for the potential for starting deployment or mass production in Q2. So those should be ready in the middle of middle of next year. And then beyond that, what's currently under development as well is A4. And A4 is really where we think that could be the game changer. So as I mentioned before, Harris's background in very deep semiconductor design background, Harris was brought in basically to put together a new team to design a completely new architecture for ASIC chips. So it's our belief that really to get down into those mid-single digit joule per terahash efficiency levels, it is going to require a new design. The current design, maybe when you get down to 2 nanometers or lower, you can get there. But it's our belief that it's going to require a new design. And that design actually is not going to be reliant on the latest and greatest TSMC process. It actually steps back several generations to an older node that is much cheaper and typically much more, less in demand, which means there's more supply available to us for allocation.
Speaking of design, are most of these early models all air-cooled?
So the early ones were, but we are actually making an immersion and a hydro-cooled. So
and which generation of SEALMINER will that be for?
I believe A2 will have both hydro and air-cooled, possibly an immersion-cooled as well. I do know immersion-cooled is in the pipeline somewhere there. We are pretty bullish on hydro-cooling for ASICs. It's a bit cheaper, maybe a little less complicated. There's some pluses and minuses to each method, but we think hydro cooling is going to be pretty successful for us.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Have you seen more appetite in the market for that? I mean, when you've done discovery calls, or maybe when you've tried to build sales pipelines and you've demoed these units to miners, has the Bitdeer team found that the appetite for those advanced cooling systems with hydro or immersion are, there's more appetite for that now than there used to be? Because I feel like, you go back a couple of years and miners weren't even, it's already complicated enough. Let's just get the air-cooled ones in there. Margins are still fine. We don't need to think about all these advancements. Do you think that the pendulum is swinging in an opposite direction?
I think it will. And I think it's going to come down to now, looking at increasing your efficiency and also extending your useful life. I mean, those are obviously the two of the biggest benefits of non-air cooling is that. So, as we move forward, in the past, we haven't been, the industry has not been very, sort of capital sensitive as far as, replacement cycle of these ASICs. It was just get hash rate online. I think this next round will be much more conscious of that, because long term, investors aren't going to continue to fund, just perpetual growth and, kind of running and standing still. So I think they're going to want to start seeing positive free cash flow at some point, real cash flow generation. And to do that, you're going to have to get more life out of your CapEx. I think it says that. The second thing would just be efficiency. Now, I'm sure we'll get into the HPC conversation, but I think we're going to be in a much more capacity-starved environment moving forward now with, I think a lot of the low-hanging fruit was already picked to begin with by most of the miners. Now we've got a new player at the table, hyperscalers who have much deeper pockets and are going to want those large interconnections a lot more than we do. So I think the story of this next cycle is going to be getting more from less, getting more production out of what you have, rather than trying to, continue to grow and grow and grow, grow your capacity. Because I don't think that's going to be an option like it was in the past.
I'm glad you mentioned HPC and AI, a good transition into that. But before, I have to ask a question that you probably can't answer. What kind of quantities are we looking at for the SEALMINER? Can you give me a ballpark? Can you give me, some sort of abstract measurement that people can interpolate on their own? Is there anything you can say about the manufacturing capacity and how many of these machines we should expect over the coming quarters?
Yeah, can't really comment on that right now. We're hoping to come out with some more guidance on that. Obviously, some of that is quite sensitive, and so can't say much about that right now.
Gotta ask it. It's okay. You can always brush the question aside. No worries. So yeah, I want to talk about the HPC and AI play. Bitdeer obviously has been moving into this market. It's become the hottest topic for a lot of public mining equities over the last year. One question I have is Bitdeer seems to be running pilots currently and is testing it out. This revenue is not reported on 6Ks. I don't know if that has anything to do with just laxer reporting requirements for foreign companies. But can you speak to some of the current AI and HPC capabilities that Bitdeer has and where they are in terms of complexity? Like how big are we talking about? How much is going on behind the scenes currently?
So we're looking at the AI market in two ways, two business models. One is what we call sort of the full service, full cloud service provider model, where we own the data center. We also own the GPUs and actually the cloud. We run the cloud service that is running behind the scenes. So we are doing that now in Singapore, more of a pilot operation. We have about we are a preferred cloud service provider with NVIDIA. And we, as part of that, we purchased about 250 GPUs last year and deployed them in a data center in Singapore earlier this year. So those GPUs are just about fully utilized right now, have been for the last several months. So we have not disclosed the revenue on that, but I think you can kind of do simple math of what 250 GPUs at kind of market rates right now would look like. So not a meaningful amount by any means, but it is more of a pilot really to prove out our capabilities in this space. And now we also expanded that business line into Canada recently. So we put out a brief press release about that earlier last month. And so that is going to be a much more capital light strategy there, where we are actually deploying Bitdeer's cloud services on a partner's GPUs. So a little bit more capital light, just another way to kind of look to monetize this whole ecosystem, without having to invest heavily in the GPUs, because that right there is really
it's a lot.
We're talking 10 million a megawatt, 10, 12 million a megawatt for the data center. There's another 20, 25 million for the GPUs. And, at this point, we really don't know what the replacement cycle for those are going to be. Is it going to be 4 years, 5 years, 3 years? Are we going to be using H100s 5 years from now? I don't know the answer to that. So
that's a good point too, because if it's anything like mining, then the replacement might be a year or two, which it's not. I don't think it'll be much like that. Obviously, mining is a much lower CapEx business,
right?
But there is that looming question. Zachary Bradford, the CEO of CleanSpark, had a famous tweet where he said the H100 is the new S17. Yeah, 17.
This smacks a lot like Bitcoin mining in 2021 right now. So you get caught on the wrong side of that refresh cycle. They come out with a new one, and you can find yourself with a lot of problems. So it's a market we're going to pursue cautiously, obviously, not to overinvest in hardware. So we think there's some pockets where we can compete, and niche markets, especially in Asia, we think will be attractive for us. So we'll definitely grow that. We've got a great team working on that over in Singapore, and hopefully we'll see some more news about that moving forward.
And so to clarify on the Singapore operations, this is basically Bitdeer purchasing these NVIDIA GPUs and then deploying them at this data center, correct?
That's correct.
Okay. Is there plans in the pipeline, and I believe this is true, that Bitdeer would like to have its own centers at a certain point, correct? That it owns and operates? Is that not at all in the pipeline? Because I feel like a lot of miners have done currently what Bitdeer is doing. This is a great way to get your feet wet. It's more capital light. You either host a machine somewhere else, or you even just rent out. Like with the Canadian model that you're talking about, you either enter into some sort of agreement where you're renting out cloud compute, or you find a way to work with someone who already has that in place. Does Bitdeer have any aspirations to retrofit or greenfield an HPC data center?
Yeah, so that sort of brings us to the second business model that we see, where we see the real much more significant opportunity in it, which is that U.S. and European, possibly Asian co-location market, where we would take one of our existing or pipeline sites interconnections and convert it to a tier 3 data center, and then lease that out, ideally to a hyperscaler or tier 1 type of customer under a long-term lease, and just own the infrastructure there. Essentially, think of it as hosting for HPC AI rather than for Bitcoin mining. Obviously, much more complex in the build process, but so that is what we are exploring, pretty aggressively right now. So we do have one of the largest, if not the largest, power portfolio of any miner in the public markets, at least. We currently have just under 900 megawatts of operating capacity, mostly in the U.S. We have about 200 or so in Norway and 100 in Butan. But then we have a pipeline of over 1.5 gigawatts. That's coming online in 2025 and some into 2026. So, and I think it's important to note that, people talk about pipelines all the time, and it's a bit ambiguous. Nobody really knows if they, these are sites they own or whether they are, in discussions. The reported, pipeline we have right now is all capacity that we control, and that is either under construction or in some phase of development, at least right now. So obviously, there's other sites we're looking at, but are not disclosed on our pipeline. So that's real power that's coming online in some very attractive areas. Highlight a couple of our properties in Ohio. We have two sites, one for 221 megawatts in Maslin, Ohio, and then 570 megawatts in Clarington, Ohio. Both of those are in PJM, so some of the lower power costs in the country. Both have significant access to water and multiple lines of low latency dark fiber as well. So
those might be prime spots for tier 3 data center development potentially.
We think so. So what we did, obviously we have, call it an embarrassment of riches as far as sites go and large scale interconnections go. So we decided to bring in a team of experts to come in and do full site suitability analysis for all of our locations, existing and pipeline, just to determine their suitability and really attractiveness for running HPC applications. So these are guys that have built data centers for the hyperscalers. They built them for big banks before, so they know what they're looking for. They know what they don't like. So we brought them in to one, just affirm what we believe that these sites are suitable, but also find just any of the hair on them. Any of the problems that are there. We want to be as upfront as possible when we are talking with potential customers. They're going to find it anyway, so we'd rather address it up front. We think that's just going to lead to much more credible conversations with folks and really speed up the process. So we've had this group review the Ohio sites. They've actually visited all of our sites. We're still waiting on some of the reports, but the initial reports for the Ohio came back, quite positive. Kind of reaffirmed all the things that we believed about them. They found a couple, warts on them, but all things that can be remedied, and some we're already in process of doing. But nothing that will add significant capital or time to power. So we're pretty excited about that. We think we've got some good assets, and we think this could be a big opportunity for the company.
Interested in Bitcoin scaling, startups, or learning more about Bitcoin Softworks? Join us Saturday, November 9th at the Fidelity Center in Boston, Massachusetts for Op Next, a one-day conference on scaling Bitcoin hosted by Blockspace Media, the producers of this podcast. Join Bitcoiners like Peter Todd, Portland Huddle, and more to discuss various Bitcoin proposals like OpCat, the Great Script Restoration, CTV, and more. Attend workshops, speaker sessions, and panels discussing the latest in scaling tech, from ZK to ARC to Bitcoin Softwork history. And for a limited time, use code OCTOBER to get 25% off a general admission ticket. Find out more by visiting opnext.dev. Again, that's October at opnext.dev. You can find out more by checking out the show notes below.
Do I recall correctly that, I think you said it earlier, is Bitdeer looking at sites in Norway as well, potentially to retrofit, like the Tidal site? Do I recall that correctly?
You are. So right now we have about 130 megawatts that's going to in Norway at two sites, Tidal and Mold. And the Tidal site is actually being expanded by another 175 megawatts. So that will be 225. So all in, we'll have about 300 megawatts in Norway. Right now, that is currently being developed for Bitcoin mining. But obviously, Norway is a very attractive market in Europe for data centers, relatively low power costs, especially compared to the rest of Norway. It's all hydropower. The rest of Europe. It's all hydropower, so green energy. And we think Norway or the EU is going to have some pretty strict data privacy laws that's really going to necessitate having EU domicile data centers. So we think these sites could be very well suited for that. Europe's a little bit behind the US as far as this Gen AI adoption process. So probably 12, 18 months behind maybe. So, but we believe Europe is even more power constrained than the US, probably with lesser opportunities for new generation in the future. So, we think these sites are going to be very valuable from that standpoint.
You mentioned being a strong player, or at least hoping to be a strong player in the market in Asia as well. Mm-hmm. Will you have potentially retrofitted sites in Butan?
Yeah. So if you would have asked me that question a couple months ago, I probably would have said not likely. That's probably going to be Bitcoin mining. So for those who don't know, Butan is a country in the Himalayas. It directly borders India and has a very close relationship with India. It's a country, they have significant power resources there. It's all hydropower. Right now they've got about 2.5 gigawatts of installed capacity that services about a half a gigawatt of demand. And they've got another 5 to 10, they think, of gigawatts under construction or in development right now. So significant power there. They're also building this what they call their mindfulness city, which is going to be right on the border of India. It's going to be essentially like a free trade zone that will about 4 times the size of Singapore, but will adopt Singaporean law and is looking to be sort of an international business hub for the Indian market as well. So one of our Jigmeling sites sits right on the border with India there. So there's been discussion among several folks that are interested in using Butan as a sort of a conduit to provide AI support for India. So obviously India is a massive market, but obviously not going to be our first project. But it kind of just speaks to the depth of the pipeline and the optionality that we have, because we see this U.S. opportunity as maybe a couple-year window right now where Bitcoin miners can be relevant in the conversation, simply because we have existing access to large interconnections, large loads. So 3 years down the road, maybe maybe a little bit longer, but by 5 years, hyperscalers are going to have their own options. They think that's enough time to get some new generation set up. New behind the meter gas plants will go up. Obviously, we've heard about the 3 Mile Island, and nuclear is going to be that 10-year type of option. So there's a very finite period in the U.S. for us to capitalize on. We think that timeline is expanded both in Europe and definitely in Asia. So I think it gives us more of a longer term play than maybe some of our competitors.
Can we expect a joint venture with the Kingdom of Butan on these HPC and AI business lines with Bitdeer in the same way that they've done it with the Bitcoin mining, or not? I have to ask it.
Yeah, I mean, look, nothing's been discussed yet. Obviously, this is very, very early days, but I will say the Bhutanese government and DHI, which is their commercial arm, have been amazing partners to work with. I mean, they've been really supportive of us. It's just been a great relationship. So we're very interested in continuing that and deepening that partnership long term.
It's one of the more interesting ones in the entire Bitcoin mining industry. I mean, like Butan, a country of about 800,000 people for our listeners, having their government mine Bitcoin with one of the premier public miners in such a way where they have, like, I think the 5th largest Bitcoin treasury as well. It's just a crazy story. Like, I don't think Satoshi in his wildest imaginations could have ever divined something like this, right? And it's one of those little anecdotes too. And I'm talking to my friends or family who have no idea what I do and think I don't even have a real job. Yeah. Talking to them about these interesting little intersections of Bitcoin mining in the real world, right? And the fact that you have this kingdom that produces way too much hydroelectricity and can soak it up, and then use Bitcoin mining to increase revenues for the government. It's a pretty interesting story. But to kind of put a cap on all of this, Jeff, this has been a great conversation. Appreciate you coming on. Just one last question regarding Bitdeer's mining business lines. So Bitdeer, not just trying to diversify, obviously, across all of these different verticals with HPC and AI and also ASIC manufacturing, but they're also one of the more diversified within the way that they use their megawatts for mining. So you have your self-mining arm, you have your hosting business, which is split up between 2 different kind of segments, the subscription model and not. And then you also have the cloud computing, the cloud mining business. Right. The cloud mining business and the hosted hash rate business have been kind of, I don't want to say dwindling because that kind of gives a bleak picture of it, but those business lines have been shrinking a little bit as we enter this really low hash price environment. Just curious to get your thoughts on what you think are the future of the hosted mining model, of the cloud mining model, and whether or not that's something that we might expect to see from Bitdeer 3, 4, 5 years down the road, especially when they get all of these machines that they can produce for above cost compared to going out and purchasing them from Bitmain or MicroBT.
Yeah, so you made a lot of points there. I'll try to hit all of them. So first one is, yes, we are, even within the Bitcoin mining segment, we are diversified. We've got 3 different verticals, our self-mining and our hosting business. Hosting is probably the simplest, obviously, where we host miners in our data center, hosting the third parties miners, and they pay us, we typically pass through the cost of energy plus some type of margin, or in some cases, we actually have a profit sharing agreement where after energy, they pay us anywhere from 25 to 40% of the revenue or the Bitcoin that they earn. So that, again, is something I don't think the market really gives us much credit for, but has served us very well during the bear market. I mean, it gave us a nice steady cash flow, yield-based stream that we were, able to not link to Bitcoin price, and that served us very well during the bear market. Obviously, once going into a bull market, it is less attractive, which is why you're starting to see some of our capacity or our numbers dwindle there, because and it was sort of by design. We entered into a lot of hosting contracts back in 2020, 2021, and that, like I said, that served us very well through that bear market. But some of those are starting to roll off now, some by design. And so now we have the ability to start taking some of that capacity back for ourselves in the form of self-mining as we go into this sort of next phase where we can plug in our own miners at a discount. So we'll always have some hosting, I think. We think it's a good business. There's some areas where we'd like to keep keep that hosting alive. But it obviously we'd favor Bitcoin mining, self-mining during a bull market. The cloud hash rate is a unique product to us. So that is a unique software program that we've developed that basically allows anybody to come onto our website and start mining using our data center and our hardware with just a few clicks. So you can come on the site and you can subscribe for anywhere from 1 month up to 3 years. And the way it works is the customer pays an upfront hash fee, which is essentially the cost of the ASIC. So for the period of time that you're subscribing over. So let's say you're subscribing for 3 years, you're essentially paying the full cost of the ASIC to us upfront. And then moving forward, we build every month for energy plus a premium on top of that. So, another way to really monetize our internal, our proprietary hash rate, very much a bull market product. So it's very much sentiment driven and demand driven. Demand's the highest, obviously, when sentiment for Bitcoin is high. So the majority of the contracts we've had in place, this year even were ones that were entered into back in 2021, really during the bull market. So what that's allowed us to do is essentially carry bull market economics all the way through the bear market. As you probably saw, our margins on that, our cash margins on that business were, in the high 60, into the 70% range, pretty consistently throughout. So those contracts are starting to roll off right now. We're hitting that 3-year mark, and it's not a service that we're offering a lot of right now, simply because the demand and the economics. Frankly, the economics right now are better to self-mine Bitcoin rather than use cloud hash rate. So you can expect to start seeing us using this again once we get maybe deeper into a bull market where hash price gets a little bit more elevated and sentiment for Bitcoin is just higher. You'll see us look to lock in some of those contracts. Not trying to time the high, but really again just hedging and locking in some of those revenues. We think gives us another big advantage.
Another kind of area where optionality might play in Bitdeer's favor during a bull market, especially. And
now that we're manufacturing ASICs, again, it just brings more and more optionality to that. We can decide, we can run the numbers and decide, does it make sense to sell this miner, use it ourselves, or sell it for cloud hash rate right now. We can even sell miners and offer to host them for our customers as well. So we can really be a kind of a one-stop center for mining, all your mining needs.
A lot of different routes to take. Well, Jeff, really appreciate you joining, man. Great insights, and hope to be in touch and have you on again in the future.
Yeah, I really appreciate it. Thanks a lot.
Thanks for listening to the Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.